Richard, let's start off and talk about what is happening with the equity markets and the bond markets. Give us an idea of what you're seeing, first of all, in equities.
Yeah, well, look, I think I'm seeing what most people are seeing, which are some extreme moves across asset classes. And clearly what's driving the action in stocks is the clear erosion, these historic moves, if you will, from the top down across both currencies and credit. And here we are testing the lows of the year on the S&P around that 3666 that you alluded to earlier. And the DAX and the CAC, again, flirting with, if not breaking just below those year-to-date lows. So clearly, this is a critical inflection point for global markets.
For the S&P, where's the next level of support before we get to the June lows? Is there one?
No, I think you're really there. You know, what I've been saying in conversations is that in fast-moving markets like this, there's no real difference technically, and I don't mean to be somewhat glib about it, but there's no difference technically between 36.93, 36.66, and even 36.20. Again, not to spend our viewers' money, but only to suggest that we're talking about 20 minutes of price action at this point in sort of an historically volatile tape.
Richard, just staying with equities for a moment, how low could we go? If you take a step back and look at where the charts are right now, can you make any longer-term predictions about the unwind that we're seeing? Where does it ultimately, do you think, take us?
Yeah, I apologize. I didn't mean to speak over you there. I think what I've been using to help guide me, and it certainly hasn't been helping that well, is the longer-term charts. And when you look back at whether it's a long-term weekly chart back to the financial crisis in '08 or a longer-term monthly chart to sort of smooth out some of that volatility, what we see is that remarkably that longer-term trend is still intact. The 200-week comes in around 35.85. The 50-month comes in around 35.25, 35.50. So again, we're within about 100, 150 handles here. Let's call it 300 to 500 basis points before we start testing those really critical levels of long-term support. My contention is if we're able to hold those levels, then again, while it sort of flies in the face of reason, the bull market will remain intact if we can hold those levels. And again, if we do breach those levels, which have not been breached going back to 2009, then it opens the door to further downside. But that's not my call at this juncture.